That makes me very happy. All right. Now we're going to get started in just a minute. And hey, can you guys see the disclaimer, by the way? I'm curious. Oh, great. Okay. I think I finally figured out how to make that actually show up. Alrighty, how the market's doing, let's see. Ooh, what a lovely recovery. Let's see if it lasts. It'll be interesting to play. All right, it's 1 o'clock, so we shall get started. Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trade. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockPro.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risks. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides educational and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money you can't afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. Fantastic. All right, now let's get started. We will share my screen, see how that works out. All right, and this is a boarding screen. Let's see what's going on. Here's our futures. Whoops. All right. So we've got, well, let's look on the other chart screen. It's a little more descriptive. We've had some big bounces, but if you look on the chart in the morning, let me go back to the morning post and we'll take a quick look. Okay, so this morning we were looking at the big chart. And let's open that in the new tab so we get a big picture. All right. So, you know, this is what we expected pretty much exactly on the S&P. It fell back. Well, you can't even see it on, well, obviously you can't see it on this. We touched 2090 exactly. That's the 50-day moving average. And of course, the 50-day moving average is going to provide some support. So we came down, and here it is. And you see how we exactly hit 2090? I mean, obviously, you know, a little bit below, but basically there's your 2090 line. That's your 50-day moving average. As soon as we hit that, this is volume. Well, it's probably hard for you guys to see. Wait, I don't know how clear that is. But as soon as we hit 2090, which is right here, all of a sudden the volume picks up. So as it's coming down, there's a big volume spike down, but then another volume spike came right back up, and then we start lifting. All right, that's just a bounce off the 50-day moving average. Now, we haven't fallen very far, so I wouldn't. You're not going to get into like a weak bounce, strong bounce thing because we haven't actually fallen from any kind of distance. We started at essentially the high. In fact, in the futures, we opened up higher than the high, and now we fell back. So basically, what you just care about is where this candle finishes for the day. Yeah, that goes for all these guys. It's a matter of whether they finish up or down for the day. At the moment, we're up. We're in the high parts, and that's going to be. It's not necessarily bullish, but it's obviously not bearish either. So we're back to sort of watching and waiting at the moment to see what the hell happens. Oh, I didn't put the chat box up. Hang on. There we go. Nobody has any questions anyway, so I'm not going to worry about it. I will just ramble on then. Obviously, as of yesterday, and assuming we stay positive today, these are very strong lines. We're above all of our must-hold lines. We only have 3 that are below 5%. So if any, and obviously the Russell can easily tick back up over. That's very close to the line. The Dow's not so close, so the Russell's most likely to show us a more bullish stance. And whenever you're 3 or 5 over a level, that's where you're getting bullish. 3 of your 5 indexes are over a certain level. That means the pressure is on the other 2 to get dragged higher. Apple's been no influence today, so it's just a question of how the individual components are working, but it's not very important. Now, just a minute ago, let's get back to our chat room. So we'll get rid of this chart. Are we done talking about that? Well, here's the Dow. Oh, well, let's take a look at the Dow, 17,980. We'll see how that held up today. And here's, well, that didn't hold up. That went down. So here's 17,980 on the Dow. And it blew right through that. But then it came back to that level. 17,980 is right here where you see these consolidation lines across. And in fact, over here, you can see how it held up. So that's a pretty solid line. And now we've blown back over that. So as long as they keep acting like support, they're, you're still in a bullish general thing. Thanks, James. Rainbow on. The Zeppelin song, isn't it? Let's see. Oh, look at gold. Wow, gold's popping. Gold's up at 12.16. That's because the dollar's weak. 96.25 is pretty weak, especially if you go back to a bigger picture. We'll do that on another chart. I'm not worried about that. Oil is sort of up and down around our lines. Don't forget, here's 55.20. Interesting how this is actually now the official support line that Thinkorswim recognizes. It's our normal support line. And here's 57.75 is our key line up here. And then 56, oh, I forgot. 56.20, I think, is another one, right? Wait, see, if that's 75, no, 57.75, then it would be 57.20. Right, 57.20 is another support. I'm sorry, that's the right one over here. And then below 57.20 is another 55 cents down, so that's 70.65. So here is a support on oil. All right, what was I doing? Oh, yeah, right. So right before we started this webinar, I put out an alert because I was watching Obama speak. He's still speaking right this minute. In fact, he's sitting there with Abiy, talking about whatever. I guess they're trying to push that TPP Asian trade pact, which is going to be terrible for the for people in the working class. It's going to move more jobs overseas and just give corporations much more rights than they have. One of the offshoots of the TPP that's terrible is that it gives corporations so much protection in international law that it becomes almost impossible to sue them or do anything to stop them from doing stuff. It gives them way too much protection. But the worst thing is they can move another 10 million, 20 million jobs overseas now. So down the road we'll be paying for that. But before that, or in the context of the conversation, he mentioned that they're going to do, because of what's going on over in Baltimore right now, they're upping the grant levels for body cameras for the police, so that any police department essentially that wants it will be able to get body cameras funded by the administration or by whoever the hell is approving it, Homeland Security probably, or something like that. So that is great for Taser, and I don't know if we're seeing it yet, but Taser is obviously something we like anyway. It's one of our favorite stocks. And we expect Taser to hit 50 by the end of the decade. So in other words, in 5 years, we expect Taser to be up at least 100%. It was our stock of the decade at the beginning of the decade because we expected a 10-bagger from 5. So, we're most of the way, we're part of the way there when Taser's already at, what, 20? What are they at? They're 30. So Taser's already at 30. So we got our 10-bagger off of Taser from the original amount. Well, no, I'm sorry, it's not quite there yet. It's only it's up 6 times since we started. And we're looking for another 4 times from our original. But even if you get it now, it's still a good trade. So our trade idea was, that we just put in chat. Wait, is this today? Yeah, this one's today. Okay, hang on a second. So let's go down here. And I just put this out, and this is even went out as a top trade alert. So I wrote Obama's taking grants for more body cameras, and in the long-term portfolio, we're going to add 10 of the 2017-25 puts for $4.55, and we're using that money to buy the 25-35 bull call spreads for $4. So we're netting in for $550 worth of cash on a $10,000 spread. I like that, right? I mean, it's nice. I mean, if I can get back $10,000 off of $550, that's good. Now, when you set this up in Thinkorswim, so we go to Taser, and we go to sell the, what did I say, the 25 puts, right? Somebody's been jumping on them already, I can see. So we go to sell these 25 puts here for $4.50, and if I sell them, they're moving up now. I never know if it's moving up because I said it or just because I have really good timing. Anyway, the nice thing about it is you're obligating yourself to buy $25,000 worth of Taser, 1,000 short positions. Now, don't forget, when we talk about adding something to the LTP's got $750,000 in it. So adding $25,000 is a tiny percentage. It's a very small allocation for us. But we're only going to spend on it $25,000. So the most of our margin that's going to get used to own $25,000 Taser is $12.5 if we end up buying it. But we're not buying it. We're just selling the puts. So the buying power effect here isn't at $2,700. So these are really margin efficient trades, and I always like my margin efficient trades in the LTP. So we're putting aside $2,700 in margin, plus the cash that we put into the bull call spread. So the bull call spread is, oh no, I didn't mean to do that. One direction. So the bull call spread is $4, so $4,000 for the bull call spread. So $4,000 in cash, $2,700 in margin, and the upside on this trade is $10,000. It's like 150% on margin. I mean, on cash plus margin, 150% of your complete outlay, potential outlay. So that's a really good, efficient trade. It makes a ton of money. It's great for a long-term portfolio. And it's Taser. We'd love to, and again, in this particular thing, we have 1.5 million buying power using 12,500, which is what, like 1% of the buying power. So so we're happy, thrilled to double down. If we're wrong, Taser collapses for whatever reason, on earnings or something, we're going to be thrilled to buy some more because the long-term story on these guys is fantastic. And as Mike notes, it's a good civil unrest play. As we trade down on that lower class, we have to make sure we keep them in line. And who was I talking? I was talking to the guys in New York City. It was, the guys I was talking to in New York City, they were venture capital guys. They were liberals, but it's just almost funny. I mean, you just have to look at what's going on. And we were commenting on it yesterday, and they were just saying, it's like, well, I guess we're just going to keep pushing it until people start shooting us. Us being the capitalists, because it's just absolutely insane. The way we are running this world into the ground, and the disparity of wealth is just getting completely ridiculous. And you can't get the government to do anything. And they're like I said, those guys are liberals. I'm a liberal, and we're all just very frustrated because, we know how to make money off of all this crap, but we don't know how to fix it because there's just too much going against it. There's too much momentum pushing the income disparity further and further apart. It's very sad. Anyway, so like Mike says, there's going to be 25 million jobs taken there. I had a note up this morning about the robots and artificial intelligence. Watson's an example of that. The guy, it was a TED Talk. Early chat this morning, we had some guy who was doing a TED Talk, and this guy, Nick Bostrom. And what he's saying is that you have to understand that once they get a little bit of artificial intelligence, once you make a self-aware computer, we're used to things moving along at the Moore's law speed, which is like every 10 years, every 10 years we increase chip capacity by 10 times, and we cut the cost by 10 times or something like that. And we're used to that, and that's an incredibly fast pace to us. But he's pointing out that computers don't operate under Moore's law. Computers operate under, internally, a computer operates on processes that are 100 times faster than that, 1,000 times faster than that. And we can't even imagine how quickly a computer is going to go from being a little bit self-aware to becoming a very vast artificial intelligence. And, you know, this guy's an idealist. He's talking ethically about, like, how you have to design it. But as he's saying it, I'm saying, well, this is stupid, because unless there's a guy in China saying the same thing, and a guy in Russia saying the same thing, and a guy in North Korea saying the same thing, everyone's racing to design the most intelligent computers and the goal of the most intelligent computers is essentially to wipe out your enemy in a military action. So it is dangerous stuff. You know, we're heading into a very interesting turning point here. And but he did make excellent points about how, you know, you can't anthropomorphize. You can't assign human feelings or motivations to a computer. You're going to write this program. You're going to say, be intelligent, come up with the best ways to do things. But the computer's immediately going to figure out the best way to do things based on all kinds of whatever a computer decides is best, not what a person would decide is best. And I'm sorry. And the other place where they're racing to make artificial intelligence is in the market. In fact, I was watching just a little while ago. There was a commercial on Bloomberg about some trading company is touting the fact that when you give them your money, they just give it to a robot, and the robot makes all the decisions. And they say, "Oh, isn't that great? We've written this program that just does all your trades for you, and you never have to think about it, and you don't have to worry about it going to sleep or doing something wrong or whatever." And I think that's crazy. I think they're going to do something horribly wrong. I think robots can make it. Robots can get bad information and make a bad decision in a millisecond that can wipe out your account. I think it'll be interesting when that finally happens to somebody. Anyway, so we still like Taser because you still have to control the humans no matter what you do, and we'll see what else gets popular as this goes on. But yeah, Watson's going to offshore a ton of jobs because look, how hard is it to provide customer service? In fact, frankly, who do I use? Comcast. I have Comcast internet and cable and phone and whatever at my house, and that thing answers most of my questions, and so does Siri for that matter, right? I mean, if you ask Siri a question, most of the time, I mean, I know it has horrific screw-ups, which is what I'm talking about with the trading, though. It has horrific screw-ups where you're like, what the hell is wrong with this thing? But on the other hand, I would say probably if you understand how to ask it a question, 3 out of 4 times you're going to get an answer out of the thing. And that, frankly, is better than when I call a human for customer service, especially if I'm calling a human in India who's only pretending that they know what they're talking about. And they're only reading their answers off a computer screen. So instead, Siri comes back and talks to me and tells me exactly what I want to know about whatever. As they refine that, this is only one generation. As they refine it to the next generation, I mean, think about it, because, you know, this is what, Siri's been around for 5 years or something like that, not even. So think about 5 years before that. There was not even the thought that somebody could do this with a computer. And all of a sudden, it's perfectly natural every day that we use this. 5 years from now, these things will be, you'll be tested to see if you can tell if it's not a human. And then 5 years after that, it'll be smarter than humans. That's just basically the way things are going. Anyway, so yes, so we're buying Taser to control the riots as more and more people lose their job. What's the lifespan of the Taser trade? I mean, we have not, if you look at Taser longer term, let's see, let's get rid of that one, that's in the way. I know I have charts here somewhere. If you look at Taser longer term, it has some ups and downs, but generally it's a really solid stock. So, I mean, obviously it should fully pay off in full in 2017, but see how it goes? So here's the last, 2.5 years of Taser. So it had, you know, it had a slow period here, then it goes up, then it pulls back a little bit, now it's back on an uptrend, now it's in a slowing period here. But you see this intersection, see that 50-day moving average coming up? I think that this body camera stuff that's going through the police, I think that's going to give it a little bit of an extra pop up to around 35. And I certainly think it's going to hold it. through 2017. I think it might even go higher, and we may have underestimated our $50 target on Taser. So, you know, it's not the kind of trade that's really going to pay you off early, unless there's some crazy pop, you know, that happens soon. And it'll never pay you in full early, of course. It'll pay you, let's say you make 50% of what you intended in a few months, then you might want to take it off the table. But otherwise, it is an actual 18-month trade, where we expect it to mature over that time. Mike says, 3 ways to fix it: war, revolution, and change the capitalist system. Yeah, unfortunately, the capitalist system will engage in war and revolution in order to maintain itself. So, yeah, Alan Mike knows that. He says that afterwards also. There's just, you can't, look, what are you going to do? You got the Cox spending, what are they spending, $1 billion on this election to make sure that their candidates get in office. And they're not the only ones. They're just the most obvious ones. They're the ones that announced that they personally, these two brothers who have $100 billion, are going to spend 1% of their money, $1 billion, to influence the 2016 elections and make sure that the candidate who's going to do their bidding is in office. They announced that publicly. That's how much balls they have these days. So, you know, so you think that the other guys who aren't announcing it, and or people like Shelley Adelson, who doesn't really announce it, but everybody knows you got to go kiss his ass too. That's just the way it is. And that's what we were talking about yesterday when I was meeting with these guys in the city. We were just like, you know, what are you going to do? It's like, you know, we could all go broke trying to fight them. But, you know, at a certain point, you just got to say, okay, that's just the way things are going. Let's just play the game. You know, we'll just go along for the ride. And it's sad. It really is. And I find it's harder and harder to make a difference. I mean, there's just this overwhelming amount of damage is being done to the middle class and the poor and the lower class that they just need more and more and more assistance, and it's harder to make a difference. It used to be, you know, a little bit could make a difference because, you know, there were less marginal people. Now there's just more and more marginal people who are barely getting by every day. And what happens when they all age? Nobody cares. Nobody's doing anything about it. Nobody's fixing Social Security. Nobody's making a safety net. Just all, you know, so all the money's just allocating up to the top 1%. So we'll see. It's an interesting social experiment, and we'll see what happens. Here we spend trillions on robots and let them blow each other up. I mean, that's give everybody their own robot. That'll quiet them down for a while. Mike says the Chinese scientists published how they edited genes in embryos, so genes that give super strong bones, good health, and natural immunity, everything that's two dystopian futures, the other being robots. I don't know if it's two. I mean, don't forget. I mean, yeah, you can beef up, you know, we'll be able to beef up our genes too, but you're not going to be able to beef up your genes probably to outthink a robot. And we have a knowledge-based society. So, you know, you're going to have a really hard time beating, once you have artificial intelligence competing for dollars with human intelligence, you're going to have a really hard time winning that game. You know, I do. I like to, you know, look, I like to think that I can pretty much win any of these games. But when you start having to deal against something that never sleeps, that has access to all the information in the world 24 hours a day, 7 days a week, and has an infinite memory capacity, and can make a trade a tenth of a second after the news comes out, not a millisecond after the news comes out, that's hard to compete with. I mean, the only thing that we see that where we have a real advantage is because right now, robots trade off news, and the news may not be correct on the surface. They may be, they don't see beyond the story, but they'll learn one day. You know, so we, you know, like we like to catch things like Lumber Liquidators is a good example. Lumber Liquidators completely collapsed, and a trading robot would see that they're being investigated. They're on 60 Minutes. They have poison in their floorboards, blah, blah. And so on the surface, that's a down story. We look beyond that story to see how much damage that could cause, how much of their business was infected, so on and so forth, and we decide to buy into the panic crash. So in that way, we take advantage of program trading, because the program trading reacts on a surface level, but that's not going to last. As they'll be able to, there's not, you know, if I can do it, it means somebody can program it into a computer. So at some point, I think those things will start to catch up to us. It'll be interesting. And, you know, hopefully we'll find another flaw that we can work on. I mean, hey, it's like hackers, right? Computers get smarter and smarter, but hackers keep adapting and finding ways to beat them. So we're essentially going to have to be trade hackers. We're going to have to figure out how to beat the machines as time goes on. Pat says, we not concerned. Well, I guess you mean, are we not concerned? Not that you're not concerned. What happened to that thing? I lost that comment. Oh, we're not concerned with Taser's earnings Thursday. No, I'm not concerned at all. Well, I am concerned. Otherwise, I would have bought 20. So if they have poor earnings, then we'll move the position into a better position. But no, I'm not really concerned. I don't see any reason that they would be missing. I think body camera sales are clearly up. I think that their Taser sales are still going strong. And I think that basically it's a great growth story. And it's the same. Look, I've been saying that for the last 30 earnings reports that I'm not concerned about Taser because I think that they're an incredibly strong company. You know, so every time they have earnings, I think they're going to do great, and so they rarely disappoint. Chrissy says, I think it was Encana we sold in the money and confused you because it was already against one you put the trade on. Encana? I know we talked about Encana, but I don't think we officially made a trade. I think we discussed it last week, but we did not add it to the long-term portfolio. I don't think so. Anyway, let me take a look at the long-term portfolio and see where we are. Where is that thing? Oh, here it is. This is out of date, so I got to go back and log back in. Hang on. All right. Do we have Encana? No, we do not. We did not add Encana. You sold a call in the money that confused me because it's already against you once you put the trade on. I honestly don't know what that is, but if we sell a call in the money, especially if we're buying the stock, it's only because we're protecting ourselves. It's not against you. In fact, here's an example. I think you're talking about Verizon because we were looking at Verizon last week. And the stock is at $50. It's still at $50. And what I said on Verizon is that you can sell the $47 calls for $520. That's in the money. And you sell the $47 puts for $430. All right, so that's $950. All right, so you're going to subtract, let's call this 50, okay, just to keep me sane. So you're going to subtract $950 from 50, and your net is $40.50. So it's not against you because you've reduced your net. You've reduced your net because you collected $9 for the 47 puts and calls. Your net is only $40.50. So it's not against you. You're going to make from $40.50 to $47. You're going to make $6.50 when you get called away at 47. You have, since 47 is $3 below where you are now, you have 15% downside protection, even though you're entering that trade fresh. So in other words, if you make this trade, if you buy the stock for 50 and you sell the $47 puts and calls for $950, you drop your net to $40.50. And now you're going to make your $47. You're going to make your full $650 plus the dividends, of course. You do this with a dividend stock, but you don't do it with a regular stock. But you do this, and you're going to make, well, I mean, if you think about it, I mean, how much is that? It's like 15%, right? Well, that makes sense. So it's 47. So you're going to make 6.5 divided by 47. You're going to make 13.8% at 47. So, think about what kind of trade that is. This is the kind of trade you do with safe money, where you want to be safe. You're taking your money, and you're going to make 13.8% over 20 months, let's say. A little less, it's said 19 months, I guess, at this point. So you're going to make 13.8% or close to 1% per month from a trade where you have to lose 15% just before, even if the stock drops 15%, you still make money. All right, so it's like a built-in hedge. So it's not against you. What it is it's being not greedy. It's being conservative. You're taking a position that gives you a huge margin of error. And the reason you're doing it is because you're really doing it to collect the dividend. The dividend on Verizon is $2.20. So when you only have when you're getting a $2.20 dividend and you've got 40.50 at risk, that's a 5.4% dividend. So now we take the 13% and we divide that by 2. So that's like, let's call it 7% over the time period, plus the 5.4%. Now you're getting 12.4% a year on a trade where Verizon has to fall below 47 before you don't get your full amount. Anything up is a win. Anything flat is a win. Anything less than $3 down is a win. Don't you want that? Don't you want to win almost every possible way unless there's like a market catastrophe? And then the market catastrophe is easy to hedge against. Because you don't have to hedge against the market going down a little bit. You only have to hedge against it going down a lot. Anything else, you make money. That's what those trades are based on. All right, so I hope that clears that up for you. What else are we doing? All right, let's take a look back at the things here. All right, so the long-term portfolio at the moment is up 49.2%. Oh, wait, somebody has another comment. Mike says, Netflix, please. Don't even talk to me about Netflix. All right, what is he saying? Super expensive, but how about this? As they ramp up their subs, blah, 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 and crappy media companies, margins, $20 billion profit. Okay, that's fine, so buy them. I honestly, I don't think so. Here's my argument against Netflix in a very tiny nutshell. Netflix is a media company. Netflix used to be a ramp-up sub-company, okay? But you know what? There's no barrier to entry. Hulu is coming up behind them. Other international companies are coming up behind them. They don't do anything special, okay? They're forcing the networks to rethink their strategy. And what Netflix is doing more so, while they're doing this, they're becoming a network. They're becoming a regular network. And what you're looking at is a company that currently has a 100 times PE ratio, competing in a space against Time Warner that has a 20 times PE ratio. The bottom line is Time Warner makes 10 times more money than Netflix does. Okay, they have more sales, they make more money, they just don't sell it the same way, but they're starting, they've got that HBO to-go thing, they've got their bundling package. Verizon just came out with a new thing. They're going to get a lot of competition, that space is going to get crowded. And the only thing Netflix is doing to differentiate themselves is coming up with new shows. But as any network will tell you, you get some hits over time, you get some misses. And as Netflix starts having a few misses and a couple of flops, just like any movie company and any TV company you ever see, they're going to drop precipitously when they have some bad news. All right, so I have no interest. All right, the only interest I have in Netflix is when they get really high, I like to short them, but they aren't really high right now. Where are they at? Well, actually they are. They're at 565. I mean, if they get closer to 6, I really want to short them. But I just don't have any interest. It's just there are other stocks. First of all, I'd rather buy Time Warner in the first place. All right, so we're at 49.2% in the long-term portfolio, which is good, but we don't have a lot of positions now. We have to be careful because now we're going to have to. Well, we've been adding. We added about 6 or 8 positions since we cashed out. We didn't really cash out because we kept our material stocks in play. But what we've added, and you can see all the ones we've added. We added Broadcom. We added anything with a 4 in it. We added Intel. We added UNG. We added we couldn't have. No, we didn't add Seadrill. We added Armor here. We added Canadian Bank of Commerce. We added DBA. We added, who's this? Mylan Labs, because of that buyout thing last week. That's it. Okay, so we added those. It's like 7 that we added. So, we added 7 in a month. It's not like we're sleeping. But we have to be careful because we got to look now at these oil positions and think about whether or not they may be getting fully, fully valued. and we have to be concerned about that. I mean, I'm not going to go over it now, but I just think that we have to take a look at these and think about how far do we really have to go on some of these positions. All right, because you always have to do that with your portfolio. You have to say, because we left those on, we left them on at the end of March when oil was 45 bucks or less, and we did that based on we thought they'd bounce back. Now they have bounced back. We made a huge amount of money. We have a ridiculous amount of profit in this portfolio. We have to now consider that maybe we don't want to ride them back down. But going into July, I think oil will stand strong. T-Bone was just on Bloomberg, I guess it must have been, as a guest, and he's talking about the shale situation, the drills, and so on and so forth. He's kind of right. I mean, what we expected is what's playing out now, is that the drilling shut down, and there's going to be a bit less production, and that's going to cause a squeeze right into the summer season when there might be some more demand, and that will somewhat alleviate the pressure of the build of barrels. But there's no way between now in May, well, it's not in May, in May, June, and July, you're not going to use enough oil, even let's count August. So May, June, July, and August, we have like 490 million barrels of oil in storage. Usually we have 400 million at this time of year. We would have to work out in, there's 3 months, so let's say there's 12 periods, let's call it 10. So in 10 periods, we have to have a draw of 9 million barrels per week in order just to get back to an incredibly high level of storage before the summer ends. All right, so not a good long-term play. So we will have to cut and run on these oil positions sometime between now and July, between the middle of summer, because I think oil is going to apex in July, and then people are going to realize that there's no way we're not heading into the exact same overbuild, oversupply category come into the summer, and it's going to go right back down. VIX bottom, I think we had VIX, didn't we? I think that might be in the short-term portfolio. So let's take a look over here. So these guys are at what, 750 roughly on the long-term portfolio. So that's up 50. Oh, there, it's up 50%. And the short-term portfolio, it was doing great this morning. It probably went back down. 116. It was over 120 this morning because of the spike down. But still, I mean, you can't complain. 185. So 175 plus 185 is what, 3? Whatever. I mean, 7. God, I didn't calculate. 750. So 750 plus 175. Not 1875. No, I'm looking at the wrong thing. That's why. I knew that didn't sound right. 216. That's how much actual. We're looking at the cash. Doesn't matter if we don't have the cash. 185 in cash, but 216 in value plus 750 is 966. That's a new record. Okay, so we're at a new record high in our portfolios, which we're constantly at. So I'm pretty pleased about that. We have a really, really good mix of stuff. Here we got USO. We're long in July, same thing basically. We're short EWJ, short FXIVs are not working. We're short XRT, not working. All these guys are not working. When you see stuff negative, 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 and we still like it, those are good for new trades. Tesla, we're long. I still think it's a crazy price. We think Tesla will stay over 140 until January. I think that's a good bet. FAS, we're working that trade. Intel is not going anywhere yet. We're bullish on them. KBH, not going anywhere. We like them. SQQ is a hedge. We're losing money on that one. Here's the rest of the fast trades. Silver Wheaton, we like silver, and that trade's positive now. TZA is a hedge, and XLU is that trade that we did with Kimball charting, but for some reason we only did one and never did another one. Look, it's working too. I don't know why they didn't do any more. So that's that. VIX. Oh yeah, I thought we had a VIX play. Did we? What happened to that? Was that in the 25 KP? Let me take a look. I know. I swear we put one in. Oh, there it is. Yeah. So who's asking? Mike's asking on VXX. Yeah, we did call a bottom on VXX because on the VIX because we like them down here, and the play we had was to say, where's a little. So VXX and the VIX are pretty close together. And so what are we saying? We took an out-of-the-money bull call spread. Nope. There it is. The May 22-23 bull call spread, which we got from nothing. It was at 22 cents. It's a $1 spread for 22 cents. It's an incredibly good price. It's out of the money, yeah, but we don't think that matters because it's really, if we're going to be right about the VIX, we're not going to be 10 cents right. We're going to be $1 right, $2 right. So we just need to get back to 23 in the next couple of weeks, in about 3 weeks, and we're going to make a boatload of money on that spread. All right, so that's how we're playing the VIX because, and in fact, look at this. I mean, just, I don't know if that's today. It probably is today. It spiked up to 22.50 or so today. That's like $1. It came back down, but it originally spiked up like $1. All right, so that's exactly what we're looking for. We're looking for a bit of a sell-off. We're looking for the VIX to spike back up and probably settle in to the 50-day moving average. How long is that going to take to go? How long will that take to go down here? So if it keeps going on this curve, by the time the options expire about here in May, it'll hit 24. And if it's at 24 in May, that's about our target, and we're going to be fine. We get our full money. All right, so that's how we're playing that one. IBM raising dividend by 18%. I hate it when they say raising dividend by 18%, though, because it doesn't matter. What's the dividend? You know, if your dividend is 10 cents and you raise it by 18%, it's not very impressive. But obviously, IBM is good. But it's not huge. It's they pay a non-exciting dividend. I think it's about 2.3. Let's see what they pay. 2.7. I imagine that's before they raise it. So they raise that by 18%. Let's call it 20%. That's 80 cents. That's going to be $5.20. And then $5.20 into 174, 5.2 divided by 174 goes to 2.98%. So they're basically going to go from 2.7 to 3%. That's how much they're raising the dividend. So 0.3%. All right, so good for them. I mean, they're returning a ton of cash to their shareholders, and they obviously held up and keep going up. But again, they're not at an exciting price for us, so we're not really into buying them. Not one for TA Mumbo Jumbo, but for what it's worth, IBM is above the 200 DMA finally. Oh, yeah. I mean, look, I love IBM, but I love them when they're cheap. I don't love them when they're not cheap. They're not cheap. If I had it, well, we did have it, actually. We sold it. But if I had it, I certainly wouldn't be worried about whether or not they're going to be a good stock 10 years from now, 20 years from now. They still are not so bad. We were buying them down here. In fact, I think, do we have them in the long-term portfolio? Damn it. Keep doing the wrong thing there. I get confused because we did cut a lot of stuff, and IBM was one that we cut. And no, we did not go back to the well on IBM. We do have the Intel, so we didn't go back to IBM. Just sad. I mean, I wish I had them, but I don't. But long-term, sure, they're totally great stock. There's no question about it. No question you want to own it. When it was down to 150, it's my bad, because I don't know why we didn't buy it here. Because that is my, oh, I know why, because we cashed out. We already had it, and then we cashed out. That's what happened. You know, we could have held on because it was, I mean, really 150 is as low as I ever think it's going to get. And we just have to now hope that there's a general market crash in which IBM comes back down and we can get back into it. Anyway, all right. Oh, here's a good idea. Let's take a look at our top trades. That's kind of an important thing. Because let's talk about trades in retrospect, a few. Because we know, we've got to see. Sometimes you got to look at why things did work. So in our portfolio tab, it should be right up there. Top trade review for April. So in other words, like just now I put out that Taser trade as a top trade. So what constitutes a top trade? A top trade, most of the things that go in the LTP end up being top trades these days. A top trade to me is a trade that, out of all the trades of the week that we've done, I think that it's probably the best chance of winning. It's a high probability of success. it's for more casual players. Like these alerts go out to people. That's all they see. They only see the trade. They don't see anything about the trade. They don't know why we talked about it. They don't know anything. They just get the trade. So it's kind of lazy, but it's not bad. So anyway, so they just trades that are good trades that we send out. So back in February, we liked GoGo, and where was GoGo then? It was 15. And this is the point I want to make about IBM, right? We don't buy GoGo when it's here. It was here, it was here, it was here, it was here, it was here. We didn't buy it here. We bought it when it got cheaper. And we said, ooh, there's a price I like. And we didn't buy it in January when it was cheaper because we didn't know where it was going to stop falling. Okay? But what we did like was when it got up to, when it sort of held 15 and looked solid. And then 20 days later, don't forget, we're watching, here's January 20th, roughly. A month later, in February 20th, that's when we make a call on that thing. We don't try to, we're not looking to be superheroes. We're not trying to catch falling knives. We're not trying to save the company. All we're doing is waiting to see where it finds a reasonable floor. And as it finds a floor, we kind of look at it, and all this time we've been doing our research and deciding whether we like it or not. And here it came out to a good spot. All right, and I wrote a dissertation on why I liked them, which was when? I think it was that day. Wait, let's see if that's 220. Okay, so yeah, here's our discussion of GoGo. We were looking at them in September. We were looking at them in September again. I wrote all about what I think is good for them. Oh, I know what it does. The reason we went in on that day was because AT&T gave up on their idea of competing with GoGo. That was the catalyst. So we've been watching them since September. And on that particular day, AT&T announced that they were going to give up their idea of competing with GoGo for wireless in the air. And we said, well, bam. That means, look, GoGo's got this thing locked up. And look what happened after that. So we found out the news right here, and we bought it, and it went boom. And that trade, even though it was a conservative trade, we sold the 2017 puts. We bought the 2017 bull call spread, okay? And that one was, by the way, out of the money because we weren't even sure. We were speculating. We thought 15 was a good floor, but we didn't know for sure if it was not going to go down, so we left room for ourselves to adjust. We took the 2025 spread, which was way out of the money back here. We were at 16, so it was a big speculation, but it worked out well. I made 87% already. And I even said that during this report. I said, look, this is, these are conservative strategies, but a conservative strategy, when you time it right, works wonderfully. All right, so it's not like you're not going to get a winner just because you're being conservative. But what it does do, especially though, is it makes it less likely you're going to have a loser. And that goes back to answer Chrissy's question earlier. It's just you don't need to go for the gold to win. You don't need every trade to be some huge aggressive trade. You do some steady good trades. Sometimes you luck out anyway. And Chrissy, what do you think? Wondering if you would make a play on the companies that supply body cameras. That's what Taser is, Chrissy. It's what we were talking about earlier. That's exactly what that Taser trade is. ABX is moving in the right direction. Yeah. Well, I mean, geez, look at gold today, 12.14, huh? That's pretty good. And I'll point out last week at 12.78, I called a buy on the futures. That was pretty good. All right. 2.26, we had iRobot, which is another stock that we love. Taser's our stock of the decade. iRobot is our stock of the century. And iRobot, now, I thought iRobot was going to punch over this line here. It didn't. It kind of flattened out, but still, who cares? Because again, this is back on 220 where it's over here. All right, and now it's moving along nicely. It's going to make a triangle squeezy thingy in this little spot here, and we think it'll break, boom, to the upside. And if it doesn't, we're happy to buy more. So that was our iRobot trade. Verizon, is that in the long-term portfolio? Damn, I cannot remember which things are in the long-term portfolio. Probably not, because it was a non-material stock, and the non-material stocks didn't survive. No, sadly, that is not even in the long-term portfolio now. We already had it in the long-term portfolio at the time. All right, there's Verizon that we just talked about that we had. I mean, obviously this is from a while ago, but Verizon we like back on 220 back here, and it really hasn't moved that much. It's moved from 48 to 50. It's not a big move. UCO now. When I was in Toronto doing that TV show, there's like a whole, the audience was full of high net worth investors that the bank had invited to come see the live show. And they asked me to give one trade after the broadcast, to have one trade for the high net worth investors. So of course I came back and reported to you guys what we did. I've not came back. I mean, obviously that day, that night, after I talked to them, I talked to you guys. And we talked about this UCO trade, which I was in love with. And I forgot when I was in Toronto for that thing. I think it was more like March, though. I think I talked about that in March on TV. This was an early trade, but the same concept as UCO. And again, it goes back to oil was too cheap. We played it to go more, and it's more now. So it was $7.92 when we played it. It went to $9. But again, there's a fairly conservative way to play it at the time, and it went up 393% in a month. All right, that's on the cash, but that's out of 1,000% that we're expecting. It's only on track. It's a July play. So we started February 27th, and here it is April 27th, so that's 2 months later. And then May, June, July, we should make another 600%. That's the kind of trades these are. And you have to realize also, what's your worst case? So we have this UCO trade. This UCO trade is actually in the long-term portfolio. And I wrote, this is a very important concept, since I have no problem being long $30,000 on oil at 45, because that's our net. If this trade went bad on us, we'd end up long on $30,000. We'd have $30,000 in this UCO trade. But when we entered this trade, our net was oil when it was at $45 a barrel. You have to think about that also when you're entering these trades. You have to say, well, look, if I'm giving myself leeway, like I was saying to Chrissy, the only way I'm going to be in trouble on Verizon is if Verizon's below 47. And if I want to own Verizon below 47 in a decent quantity, then how do I get in trouble at all? If you love your downside, you're going to be a very happy trader. You know, if you go into trades where you think the downside would be cool, like owning oil or having a lot of long-term oil contracts at 45, I think that would be great. If you think your worst-case scenario is something you'd really like to have, you're going to be a happy, happy trader. Here's that Lumber Liquidators. We were early on 3-2, and we actually upped this trade. We came in too early on March 2nd when it first fell. We thought sanity would come around sooner than it did. It didn't. Dropped another $10. We doubled down here. And now we're in the trade. So we're just hoping at some point it comes back up. There's no hurry, though. We took 2017 positions. And this one in Lumber Liquidators, I'm pretty sure is still playable. Let's see. Yeah, see, look how negative we are on this. Minus 3,700, minus 1,250. So you can get in this Lumber Liquidators trade for a lot less money than we started. All right, we're not worried. And especially we're not worried because we own the 30s. We sold the 55s, and we sold the 40 puts, and they're at 33. So our net on this is a credit. Wait, is it a credit? Yeah, we spent $13.72 here, $12.50 here, and $6.25 there. That's $19.25, and we have basically a net credit. So we're not in trouble at 33. We're happy at 33. It just doesn't look that way because the options are against us at the moment. All right, but that's normal. That's just the way these things work. I mean, you can't be positive all the time, but you have to recognize that in your portfolio. You have to allow for that in your portfolio, and you have to have margin that allows you to relax about it. Also, you can't have because your margin will go down in your portfolio. Your buying power goes down because you're technically losing money. You're losing money on paper, but as long as it's on paper and you don't panic out of the position and turn it into a real loss, there's no issue. Oh, there's ABX. So we're just talking about ABX finally moving. So here we are on March 9th, calling for ABX. I said it's worth a toss in the 25K portfolio. What happened to that? Did we do that? Wait, I think that expired already. Oh yeah, it was March. I'm sorry, that was a more we went for the March 1050 call. That was a great play. That one already worked out. So that one's cashed already. Here's SCO. Now another great way to play oil when it was low. And we did it here. We did it here. We caught it on the nose, and we caught it on the nose again here. And we shorted SCO. Instead of going long on oil, we went short on SCO because it's a stupid ultra that gets all puffed up. All right, so that's another great way to play it. Here's USO. Boy, did we like oil. What day was this? Oh, March 9th. This is when oil collapsed back here. When oil was collapsing, we added. What did we do when oil collapsed? We added and we added and we added. Let's take a look at oil. So we're talking about March 9th. Oh, yeah, you can see that. Where's March 9th? Here's March 9th. So you started adding oil plates here, which is early. And, oh, wait, that's the 18th. Wait, oh, I'm sorry, ABX was March 9th. It's the 18th that we started adding it. So we have this SCO trade on the 18th. Then we had a CL long at 44. And let's see where oil actually bottomed. It actually bottomed at 42.41. So here's the 16th. Here's that would make this the 17th. So it was right around here. I mean, we definitely caught the day that it bottomed. That was the day the oil was bottoming. We were making these calls. And again, it just goes back to this is just a fundamental thing. We liked it here. We were making calls along here. It got even cheaper here, and we didn't panic out. We took opportunity to buy more. Because you know what happened? When we had it here, we kind of regretted that we didn't have more. So the next time it comes down there, instead of thinking, oh my God, it's going to go to zero, like they were saying in the media, we said, wow, you know, this is the premise we had here, the oil would go back up, is the same premise we have here. And what do you know? It went back up again. Except this time, we loaded up the truck with these trades. We did SCO on the 18th. We did CL, futures long, on the 18th. We did UCO, also the 18th. We did USO, also the 18th. And here's 44.25. And I said, oh, oil may have a bit more to fall, but if it doesn't, you might miss one hell of a buying opportunity. So I'm just scaling in at these levels at 44.25. So what was the dead bottom? And the dead bottom was 42.41, and we did. I mean, you know, on that day, we just kept buying and buying as it got lower. And the next day, it was back at 47, a $5 swing in a day. So that, you know, that's where these things come from. The reason I want to go over this is so you understand, like, that's where these things come from. So when we hear a news event, when something makes sense for us, oh my God, and then we went for OIH. There's even more. No wonder we made so much money in the long-term portfolio. Holy crap. So we added all these different trades as oil was going down. As it was, we didn't know it was a bottom for sure, but we said, you know what, at this price, it doesn't matter. Eventually, it'll come back, and we're going to be happy to own at that price. And it goes back to what I keep saying to you guys about, like, buying a pair of jeans. It's like, I know what a pair of jeans is worth, so when they're on sale, I'll buy them. If they're not on sale, I won't buy them. Doesn't mean I don't like jeans. You know, and that goes for these stocks too, okay, like IBM. IBM's not on sale, so I'm not going to buy it. If IBM's on sale, now, if IBM has some problem, if Watson starts cursing people out on the phone or something like that, because somebody ran some virus into it, and the stock drops like 25 points, and IBM's back at like 140 or something like that, that's not going to make me not want IBM. You're gonna, you know, we're going to set back, we're going to assess the damage, look at what happened, and most likely we're going to say, okay, so something happened, something bad happened, and we're going to start buying IBM now, because we know we like it. And the only way that's going to happen to you guys with your trading is if you stop following whatever stock some jackass on TV or some guy you're reading picks and start following your own stocks. Like pick 20, 30, 40 stocks that you know like the back of your hand and make a buy list, make a watch list for them. And then after a while, you should have a price that you say, I want to buy if it gets down here. And over time, if you have like a 40 stock list, the chance of going more than 2 weeks without one of your stocks going on sale is pretty slim. But you got to do it the same way you buy Levi's or something like that, though. It's like, I know for a fact I want them. And if they happen to go on sale, I know I'll buy them. But on the other hand, if somebody offers me $80 for a pair of Levi's, I'll sell them too, because they ain't worth $80. I can get 2 more pairs. I can go, even if everybody in the world is paying $80 today for Levi's, I know that if I wait for the stupid fad to die down, it'll go back to 40, and I'll be able to buy 2 pairs instead of 1. I know that because I know what they're worth. And if you don't feel that way about the stocks that you're in, you shouldn't be in them. All right, what else do we have here? We have FCX, also great timing. Boy, we were good this month. Holy crap. I don't know what day this is. What day is this? Oh, the 19th also. Okay, so here we are, March 19th. Everything was coming. See, we're double bottom. Except we don't know it's a double bottom when we're buying it. We're buying it when everybody else is running out of it. But that's because we don't care. We know we want it. Here's the 19th, 16th, 17th, 18th, 19th. There's the day we bought it. It just so happened to work out to be exactly the day that it made its next low. That was the exact day it hit the lowest possible level, and after that, it never looked back. And at 17 to 23, that's a $6 gain off of 17. It's like 30-something%. All right, so the reason this stuff works, there's no magic here, and it's certainly not TA. Because good God, imagine if I can't really do this with the screen. If I could block this out, this is what you're looking at. You're looking at before the little hand thing here is what you're looking at on a chart. It's doom. We are going here and watching this chart and saying, okay, now we want to buy it. All right, the chart looks terrible that day. We don't care if the chart looks terrible. We care about what we think is a good value for the stock. And on that basis, we buy it. And how do we buy FCX? Now, we already had $15 puts. We took advantage of the dip. I'm saying let's take advantage of the dip to go longer. Because we already had the $15 puts from the last time it went down, and we liked them. And now it went up, and now it came back down. So we took this opportunity to add a bull call spread. So now when it goes up, we make even more money. And again, it goes back to, why does that work? Because we know what it's worth. That's why it works. Because we aren't randomly buying stocks, and we're not chasing something we don't understand. I mean, I know that sometimes gets dull. I talk about the same stocks over and over again, but they're the same 100, 200 stocks. It's not like there's only a couple of stocks. I like going back to stocks that I know. I like things when they're cheap. I like to find stocks that we're all familiar with that we can play. And I especially like stocks that are blue chips, because I like to buy stocks that I know. I know for a fact if something happens to IBM, it's going to be in the news. If something happens to FCX, it's going to be in the news. Like the second it happens, it's going to go across the Bloomberg screen. I don't want to be in stocks where they could have a merger and you don't even hear about it unless you happen to read the paper. That you have to be looking like deep in the, on page 4 of the financial section before you even find out that your stock got bought by somebody or made an offer or whatever. Okay? All these different biotechs, all these different names, all these tickers, these things that Cramer screams about every night. It's like they're just little tiny companies, a lot of them. And if they're a little tiny company, they're not going to make big news unless you do something really dramatic. And unfortunately, that really dramatic thing could be up or down. But I know that anything Hewlett-Packard does, I'm going to hear about it. Anything IBM does, anything Apple does, anything Microsoft does, anything Intel does, I'm going to hear about it. I like owning stocks like that. Let other people do the work for you. I don't have to dig and find out everything on it. Other people are checking that. And that's the other thing. There's 1,000 analysts following those stocks, not just 5 people. I like to have more opinions. I like to have more journalists researching them. I like to have the CEO ask more questions on a regular basis. That's what you get when you stick with blue chip companies. Okay, so you have to realize that it's like everybody comes with these. Everyone's got the new hot stock and this and that. But meanwhile, you buy these stocks, you don't hear about them again for a month or two, and then they go up, and I get this all the time in chat. People say, "How come this is going up and how come this is going down?" It's like, I don't know. It's just some pissant little company. It could go up tomorrow. Who knows? It's a rumor can make it go up and down. That's another thing. When you have a blue chip stock that's heavily traded, they don't tend to trade off a rumor. They're people are fact checking everything that happens. That's also good. So you're saying, those of you who don't like volatile trading, you got to consider these strategies. Like conservative, long-term blue chip strategies are great. Make your life so much more relaxing. All right, Dennis says, talk a little about your reasoning on the up call from this morning. Oh, well, that's easy. Up is the dollar long, and we're heading into a Fed meeting today. They're actually meeting right now, and they'll be meeting again tomorrow, and they'll give their statement tomorrow at 2 o'clock. So here's the dollar, and the dollar was at 100. See, the dollar went here. It hit the 50-day moving average. It went up to 100 from 96. Now it has consolidated back to 96 into the Fed meeting. Okay, and I'll bet you, in fact, let's take a look. I bet the last Fed meeting was when it started going up last time. Let's take a look. Aye, this must be important. No, it's not. I stop that thing. All right. So where were we? Fed meetings. There you go, Fed meetings. I'm just curious when the last meeting was. March 17th. Okay, that answers that question. So here's March 17th. Oh, I see. So you see how we had this downturn into the last meeting? Here's March 16th. So this must have been the Fed day or something like that right here, this big spike down. So it went down, tested here, came back up, and we sold off, came back, sold off again. Now we're selling off into the next meeting because they're probably going to say something similar to what they said here that spooked everybody. But here, it wasn't baked in. Now it's baked in. Not only is it baked in, but we're now down testing the 50-day moving average, which is at 97.37. Okay, we're actually below it. All right, but it's going to, we've already worn out. The people who want to sell have been selling. Now we're coming to the next Fed meeting. Maybe it'll spike down or whatever, but I think that on the whole, we're going to just come back up because I don't see how the Fed's going to say anything that's going to make us, what's going to make the dollar weaker than the euro and weaker than the yen? There's only two other real currencies, so the euros and the yen. So what is the Fed going to say that's going to make the dollar relatively weaker than euros and yen? Can't even imagine. I can't even come up. I mean, other than saying we're going to double up on our quantitative easing instead of cutting the program back, we're going to put our foot on the floor. I really just don't see what's going to happen there. So that's why we're long. And the long position we took was in what, the $25,000 portfolio, I think, right? Oh, there it is. Okay. All we did was take. Look, it's not a huge gamble either, by the way. We're talking, I don't want to blow it up to more than it is. The up call was we're risking $400 or $390 it came in at. So we're risking $390 on 10 contracts, and we're hoping to make $200. We're hoping it gets up to like 60 cents from here. So, let's not say I'm making a major currency call. I just think that there's a good chance we'll get a nice pop on that one. All right, so that's what we're looking for in that trade. Alrighty, so let's see if anything else exciting going on in the market. Oh, okay, things are curving over a little bit. Well, that's fun. All right, before we go, let's see if we can make some money. So things are popping back down. Watch the Dow at 18,000. Here's 2,100 maybe on the S&P, 45. We're right back to where we were this morning when I said we should probably short these things. All right, because earlier this morning we caught these things for shorts. I don't know that there's any news. Let's see if we can find out. All right, you know what? Let me take a look at my other computer just to see if there's any news. because I'm not going to knee-jerk short these things. I want to see if there's a reason that we're selling off now. Timing-wise, oh, we had the auction at 1 o'clock. I don't know how that went. I'll find out in a second. Let's see what I see. Lexmark flips. PayPal does something. Who cares? Gumlich. Nope, don't care. Taser and Digital Alley are both. Oh, DGLY is another camera company. Holy crap, they're up much more than Taser. But still, the same logic, though. The Baltimore riots are causing it. It's really Obama's comment, not the Baltimore riots themselves, that are causing it. But I don't think people have really picked up on that yet. There really is nothing here going on. Nope, sorry, I'm looking at all this different news and there's nothing really particularly of interest. All right. That being the case, all right, so we want to look for who is the best candidate to short, and that would be the Dow. So let's get the Dow up here. That's $1. Now, the dollar is weak at 96, but it's been holding this level. If it slips below it, we'll be concerned. But if we look at YM, on the Dow, I'd want to see 18,000 break to the downside. And if it doesn't break to the downside, I'm not going to want to short anything. So here, since 18,000 matches up with 2105, that becomes another level I'm watching. And that lines up with 1255, which is another level I'm going to watch. And I think this morning, that's probably the exact thing that we said this morning, isn't it? Let's see, Control F, YM, 18,000. It was 2102 and 4517 this morning, and 1252 on TF. And now we're at 1255, so it's actually higher. All right, so since the Russell is a bit higher, I kind of would lean towards shorting that. But I'm not going to short anybody if they're over their lines. All right, I want to see these guys go lower, not higher. Oil's holding up, and that's going to keep Exxon CVX up, which is going to keep that up. I'm looking over at Apple now, and Apple is holding the line at 132, so it's not going to weaken the Dow as long as it holds the line. So no, I'm sorry, unfortunately, it's not a particularly good short at the moment shaping up. Okay, I think there will be. I think shorting the Russell here at 1255-ish. If it breaks below that line, I would short it with a tight stop. I'd certainly short the Dow if it fails this 18,000 line again. Look how much money we had here. We had a nice 50-point drop there, which is good for $250 a contract. The Russell this morning from this 125250 that we shorted at, that dropped all the way to 40, which is $1,200 per contract. On that little move there, it's $1,200 per contract. It's wonderful when you short these things and win. All right, well, let's go ahead. All right, say what? Let's go for one, because that's my favorite short right there is the Russell. And we'll do one contract, see how it goes. Now, let's see. Mike says, I know it's a bubble, but should be believed that don't fight the PBOC narrative. It's a $3 trillion market cap. They can keep it profitable for a couple of years, very speculative. Yeah, of course. You know, I mean, it's hard to short in this environment, but the issue for me is not about shorting, it's about why should I go long? We're not heavily shorting China. We're taking a speculative play on China. We have a speculative play on Japan. One day they're going to blow up. So I'm going to keep rolling those year after year after year if I have to. And eventually we're going to catch a huge win. But it's not a major play. It's only a few $1,000 bucks. We're not risking a ton of money on this kind of thing. I just think I think if things collapse, those guys are the most likely to collapse. Would I go long on it though? I mean, no. Under no circumstances am I going to go long on China. I think that's crazy. I wouldn't go long on Japan either. I don't care how much money they throw at their economy. They're throwing you know what it is? It's like you have a guy, and he's on the operating table, and he's dying of some traumatic injury, and the doctors are pumping blood into him, and they've got him hooked up to machines, and they're all around him. They're giving him adrenaline, they're giving him pills, and they're doing this and that, and they're stabilizing. And you're saying, "Oh, should I bet on him to win the race to win the marathon next week?" It's like, no, they're barely keeping him alive. That's not bullish, okay? Barely alive is not bullish, and that's what these economies are. Especially when you look at the numbers of the Chinese retail and crap today. That's barely alive. That's not a bullish scenario at all. So dual Momo that STJ has been looking at. I actually bought into the VEU today since it crossed over VOO on the chart, keeping time frame. Yes, this is. You know what? I frankly don't have the patience for those kind of things. It's like if I'm going to make a bet, I make a bet. So unless I have an actual opinion, I'm not going to play. There's definitely sense to that play, but it's not for me because it's like I like to actually make a bet. So if I have an opinion on something, I'm going to find a way to play it. I'm going to put my money down. I'm going to make a bet. Those guys are a good play. I'm interested to see how it goes over time, but it's just too much bother. I mean, I'm sorry. I have lots and lots of trades out that require my attention, and that one requires way too much attention for the return that it delivers. So that's my opinion on those. That's why I don't waste any time talking about them in chat either. It's fine. It's fine for people who like to play it. You know, you can make nice money playing those things all day long, but then I'm busy, as you know. I'm talking to people all the time and chatting and looking up stocks and finding other things, and most importantly, I'm looking for long-term plays to invest in. So over time, I'd rather have my long-term plays that I can go and walk away from and not have to stare at all the time. All right, so how's this thing going? 70 bucks so far. That's not bad though. I mean, make 70 bucks in like 5 minutes. He's not breaking down yet. He's right at the 1800 line. If he ticks up at all, the Dow or the S&P now, I should take the money and run, right? 70 bucks isn't bad. And he did. So he ticked up. I'm going to get out of this trade, hopefully. There it goes. And I'm up 60 bucks. All right, not so bad. That's how you make money in the futures. Now, how long, Mike, have you been staring at VEU and VOO to make 60 bucks? I make 60 bucks in 10 seconds. I mean, what's the big deal? So basically with the futures, once you enter a trade, you should immediately be looking for a reason to get out. You know, when you enter a futures trade, if you're day trading it anyway, you should be like a scared rabbit. Like the second you get in, anything that scares you should get you out of the trade. So what scared me? This guy bounced off 18,000. He tested it. I would have been thrilled if it failed, but it didn't fail. It held that line. All right, so since it held that line, it's not weakening. He also, the S&P, didn't fail his line at 2105. So if they both held their line, why would I still be short on the Russell? It's not getting confirmation from the other indexes. Doesn't mind me. Kobe burgers, 60 bucks. Are you kidding me, Joe? They're not 60 bucks. They're like 50 bucks. It's a Kobe burger and a tip. In fact, at the Cheesecake Factory, they're only $15 for a Kobe burger. It's not as good as the one at the Old Homestead. But, yeah, it's not as good as the one at the Old Homestead, but I like those ones at the Cheesecake Factory. That's the ones I settle on when I'm home in Jersey. So anyway, so now, okay. So to be serious though, so now I've got my 3 things that I'm watching. So what happened? I got out of this one at 54.40. It's still at 54.40-ish, okay? But I didn't get my confirmation from these guys. But now if I get a confirmation from one of these guys, I can play them instead. I switch horses because he's already below. So the Russell's already below. Now I'm waiting to see if the Dow or the S&P go below. And right now they're not moving. Now, see the S&P here? The S&P is a good indicator, though, because it's getting stuck. See this purple line? At, what is that, 18,020. So it's not getting over 18,020, and that's resistance here. That's a midline resistance. The S&P also is not getting over their midpoint resistance at 2108. The Russell clearly already failed over there on their resistance. So everybody seems to be failing their resistance. So now what I'm looking for is to see some more, maybe another rejection of those resistance lines, and I'd like to go short again. But again, the same thing with stocks is true on the futures. It's mostly watching and waiting. You don't just jump in. You don't say, the worst thing to do when you're trading the futures or day trading anything is you don't say, okay, I've got an hour to make a trade, and so that means I've got to make this trade. And you're watching the clock. It's like your lunch hour, and you're watching the clock, and you think, oh, there's 15 minutes, I haven't made a trade yet. I really got to trade something. You never want to force a trade. All right, you make your trade. See, now I see the Russell's now making a lower low. So now I'm going to bet on the Dow to break down with the Russell. There's one sale on the Dow. Okay, so now I got a short on the Dow. Why am I shorting? Because look at the Russell. It's making a lower low. And the S&P now, I'm going to verify with the S&P that it's going to fail 2105, and I want to see the Dow fail 18,000. So I went to the Russell first. That did what I thought, but then I didn't get a good signal from the Dow and the S&P. Now the Russell's giving me a better signal down. I didn't catch it on the Russell, so I'm switching horses to the next guy I think is going to break down nicely, and that's the Dow. And here's the Dow. He's going to test 18,000. So I'm immediately saying if he holds 18,000, I'm going to start getting worried about this trade. He's holding 2105 so far. He's testing. And the Russell is still going down, so I feel good about that. He's going down. I feel good about that. Even though the Dow's bouncing a little bit, I'm still pretty encouraged so far. Come on, baby. And it's not going to happen. So I'm going to try to get out. And there it goes. All right, so another 15 bucks. Not so terrible. All right, if you're not getting your confirming signal, get out, think about it, step back, and go through it again. Now, whichever one, the Dow or the S&P, now at this point, whichever of the Dow or the S&P is the last one to fail, 2105 or 18,000, that's the one I'm going to short the opposite one, the one that didn't fail yet. The Russell, see the Russell turned a little bit green. That's why I decided to get out of that one. 1802, 1803, 2105.50. Now these lines are holding up so far. We're coming into the close of oil though, so I think that's probably why. I think oil's giving these guys a little bit of a boost. So the NYMEX is going to close in 15 minutes. And we're getting back to 57.20. Which we know is a support and resistance line. 1801. And remember, if he goes 17.99, I'm going to short the S&P. I'm not going to short the Dow. I'm going to short the S&P at 17.99. What was your line on NQ? I don't have a line on NQ right now. Did we have one earlier? Oh, look at NQ. Yes, the NQ fell all the way down to 45.10. That's another weak one. All right, so we can start watching oil. Let's take a look at NQ. Look at that. That's a nice turn down, huh? That was from 45.30 down to 45.10. So basically, you know, we went up here. So basically, futures, bullshit highs, wiped out, clawed back to the same bullshit high, partway to wiped out again. 53.1, new low, 2105, 1801. Ooh, who do we want to short more? Dow. All right, we'll go for the Dow. Come on, I really want the S&P to fail now. I'm just praying for that to fail. I was a little jumping the gun there. There we go. I knew it. 2104. Thank you. All right, so now we can have a nice little dip. So the Dow is more prone to a fast dip than the S&P is. That's just something we know from historical. So now we can watch. Now we're watching 1250, 250, which is where we shorted earlier and made some great money. But I'll stick with the Dow for the example. And now I want to see. Well, see, he went over 05. He went over 18. Not good. So it was looking good for a second, but now it's not. He's bouncing off of 45.10. He's holding 52.50. I think they're all going to collapse into the close there, frankly. But still, discipline-wise, you don't want to ride this out. Okay, now we're down 10 for the day. So if my premise is blown, which it is at the moment, you don't want to take too much of a chance. And it is. See, the S&P just went up, so I'm going to get out of this one over here. There it goes. And that puts me 5 up for the day. So I lost $5 on that second attempt. All right, and why did I lose it, by the way? I lost it because I jumped the gun. I didn't wait for the S&P to cross under. I jumped the gun on it, and that served me right for losing some money. All right, so I lost half of my $10 gain just there on that trade. Now we're back at 05. I do think they're all going to break down, though, from the look of them. I mean, the way they're looking, they look like they're all getting dragged down. You see this volume here is increasing. That's key, too. This is the S&P volume is what matters most. The volume on the S&P is increasing as it falls lower. That's definitely a sign that there's going to be some more selling. So there's certainly a buyer at 2105, and the question is, who's going to get exhausted first, the buyer or the seller? All right, so we'll see which one works. There goes the Dow below. Now, see, now the Dow crossed, so I should short the S&P here because the Dow did cross. What happened? Oh, I am short. Okay, it's okay. I didn't hear the sound. Now the Dow came back up already, but like I said, I think everybody looks bad enough where I think it's worth a shot for the short, and we'll see if we can get a little bit more out of it. But on the S&P, see the Dow is easier because it only moves a few bucks each time. The S&P is already down 25 bucks on that tiny little bounce. And what I could do now, what if the S&P got away from me? Like, what if it shot up, okay, on me? What I could do is go long on the Russell to catch up to the S&P, because the Russell moves faster than the S&P does. And that would let me readjust. All right, so I don't want to do, should I do that as an example? Let's see what the Dow does, 1810. Yep, the S&P is going up higher. Oh, okay, I'm 30 bucks already. 40 bucks, 50 bucks, I blew it. I didn't hit it. 30 bucks. 1810, 1811, 1810. Remember, 1820 is where we think it's going to stop. So I still don't see any news that's making any of this stuff change. So I think on the whole, I might want to press my bet now. All right, and again, what am I doing? I'm adjusting my expectations. I'm adjusting my strategy. I'm adjusting everything based on what's happening. All right, so what depending on how things play out over this time, I'm deciding on whether or not this thing is going to stay weak enough to come in. Oil is closing in 5 minutes. It's topping at 57.20, which is where we expect it to be, because that's the first strike down below the 57.75 mark. If I sell another one here, all it's going to do to my average is bring it up like 25 cents. So there's no point in doing that. If I want to get my average to 2016, I have to get up to about 75. So 2106.75, I'd be inclined to sell another one, but not anywhere else. Otherwise, I got just as good a chance of getting even. So I don't have to worry about that one. I'm not worried about the Dow now. Thinking the Russell might be kind of fun to short at this point. But let's just see how the S&P plays out for a few minutes. I'm going to watch it until the oil closes at 14.35 on the NYMEX, because I think oil is right now at, it just failed at 57.20, so it's back to 57.08. I think oil is the reason that the S&P is holding up. And we'll find out in a few minutes. And let's see how the dollar is doing. The dollar is at 96.20. So the dollar is still very weak, but I don't think it's going to fail 96. And if the dollar doesn't fail 96, it's not giving a positive push to the rest of the market. A little tedious at this point, though. It's like it's either going to go or it's not. Now, if I had more conviction, I'd play with more of them. But all I'm doing is showing an example of how you want to play this stuff when you've got your lines. So we have, with the lines remain, 45.10 over here. We want to see break below. We want to see 125.250 break now on the Russell. We want to see 2105 on the S&P, and we want to see 18,000 break on the Dow. Right now, none of them are breaking. So if none of them are breaking, this is probably not the best play to stay in. But the only factor that I have, like I said, the wild card factor there is that oil closes in 5 minutes. It's probably being pumped up into the close. And if Exxon, so let's take a look. If Exxon, which is up 0.72 for the day, and CVX, which is up, oh wow, which is up 1% for the day. Okay, so those guys are adding 20 points to the Dow right now. And the reason they're happy is because oil was up for the day, but now it's flattening out. Now into the actual close of NYMEX, it's coming back down to the 57 mark. So if it starts failing that, then those guys might start turning around. They start turning around, they'll drag the Dow below the line over here, because 20 points on the Dow is going to take them right below that line, and that'll drag everybody else down. Why does BNO lead CL? Well, because they were open earlier, for one thing. That's the main reason that BNO. It doesn't. I don't know if it always leads CL, but it certainly is a good indicator. Like BNO is flat for the day, so if BNO is flat, there's no real reason oil should gain anything else. West, the oil we track, CL, is West Texas Intermediate Crude. It's a very, very tiny portion of the world's oil. Brent is naturally a much bigger portion of the world's oil than West Texas. So that's part of the reason Brent leads. It's more heavily traded. It's a more important part of the world's oil supply, and also they wake up earlier than we do. They got a 6-hour lead time on us. So that's another reason. It's already actively traded by the time our pits open. So you get a little bit of that effect also. Oh, look, we're back to even on the S&P. See, aren't we glad we didn't get out of it? And Mike says, wondering if you should sell calls against T-Stop back to the high end of the range. Oh, let's take a look. That's an interesting question. I think so, because I don't know of any reason AT&T would be breaking out of the range. I mean, we know the iPhone 6 sales were strong, but that kind of cost them money early on. As people cycle up, they have to lay out the money for the phones. Yeah, I would. That 35 line, that's going to hang pretty tough. And even if it doesn't, what are they going to do? Go to 36? So if you can get $1 for some calls, then I sure would. All right, let's see. Where are we? Oh, nope, not yet. Oh, come on, oil. Oh, there goes oil below 57. All right, so, hey, our premise is holding up, that the oil was pumped up into the NYMEX close. Now it's actually closing. Some selling's coming in at the bell. We're below 57. We're expecting that Exxon and Chevron aren't going to like that, and they'll start selling off a little bit. And if we get that, let's see. And Exxon is now at 87.68. So if we do get that, we might get a little bit of a sell-off. In any case, though, because I have to wrap this thing up now, actually. In any case, I still want to stick with this S&P short into the close. And what I will do, though, is at 75, I would sell another one if I have an opportunity to. That will make the average 2106. And, of course, once you have two at 2106, oh, here it comes, okay. Oh, that filled really fast. So now we want to buy back at 2106, so we're short one at the higher strike. All right, and that's what I want to play into the close. I'm hoping we come back and test 2100 into the close, which would be, another $100 and something. All right, so that's what we're going to be going for. All right, so this is coming down nicely, and now we're hoping that we're going to see reaction in Exxon, which is already down a little bit at 87.67. And then Chevron, of course, and those two can bring the Dow back below that 18,000 line, although it's going the other way at the moment. But we don't want to see 1820 break. If 1820 breaks, we might want to get out of the trade. But as long as the oil's below the 57 line, I'm pretty happy. And we're going to see these guys retesting 55 now and see if they hold it. That's another good place to short if everybody else is participating. Nope, it's going against though. 54.90, 54.80, so close. See, once you're in this thing, 201.06, the next thing I want to do is, how would I raise my average? So if I want to raise my average to 21.07, what do I need? I need 2 points higher than 2.016 to have 3 at 21.07. So that means the next time I would want to add a position wouldn't be all the way up until 21.09. And then I have to say to myself, well, at 21.09, do I really want to add a position? Am I really going to be confident? And the answer is no, because look, here's 21.0814. Once we're over that line, I damn well better be out of this trade. So you have to realize that when you're in these trades, you have to understand at what point it's going to be hopeless for you, and you need to get yourself out of it. So basically here is the end of that trade. If we go over 21.0850, I'm not going to be doubling down because now it's back in this realm where it could go all the way up. So basically, again, I don't think he's going to get over 20. I don't think he's going to get over 55. And if those things hold up and we start heading back down, we'll be in good shape. And as long as he's at 57, under 57, the whole thing looks like it might go our way. But I have my buy-in here to get back to 1 as soon as possible. Because the only reason you double down on an entry is because you want to lower your basis. It doesn't make sense to lower your basis if you're not going to take half back off the table, so you're left with 1 at the lower basis. Your goal wasn't to have twice as much. Your goal was to have 1 at the lower basis. That's why you're laddering into these positions. All right, so a little bit of luck and this guy's going to fill, and then we're going to say, okay, that's where we're going to leave it, because I'm very happy with the 21.06 entry. You see how that works? You just got to be patient, and you've got to pick your position, and you have to check and check and check your premises. All right, because that's the way you play these things. You got to be careful about it. They move really fast. They cost a lot of money, and it's very dangerous to hold these positions at any given time. So you've always got to be looking for the exit door. Everything's got to look right. Everything's got to be confirming what you want. And if they're not, you should get the hell out. And if we hadn't done that earlier, we wouldn't have the profits we have now that are buffering this loss of $75 on this one. All right, but even so, if things go the wrong way, if these guys break up, and I don't think they will, but if they break up, this could turn into a loss overall, which I'm going to be pretty upset about. Because apparently every time I do these seminar trades, we do them at the wrong time. But you know why also, though? It's because I'm forcing it, right? I'm forcing the timing. I'm not so much trading it because it's a perfect time to trade it. I'm trading because I want to show you guys how we do these things. So keep that in mind also. It's like it's definitely not me doing what I should be doing, which is essentially not trading these things right now. And Mike says, wow, so AT&T added 1.9 subs in the quarter and 800,000 were cars. Wow, really? That is big. That is an interesting new subscriber base that I hadn't really been thinking about. I would have realized it's got similar numbers like that. That's a huge thing. So yeah, I guess why not, right? If you tell me that adding a car, oh no, my kids want that. My kids want that mobile Wi-Fi thing. So yeah, I could see that being a big thing for them to boost some earnings. You're right. They might actually do better than we think. We might have to ratchet up our expectations on Verizon and AT&T. Oh, there's 1820. When was this announced on AT&T? 1 second. DirecTV and AT&T expect higher synergies. U.S. needs to understand the internet going mobile. There's a guy on CNBC talking. Is that where you heard that? It's very interesting. NASDAQ's lower? Nah, not much. Nope, on the whole, these things are strengthening, so it's certainly not going the way we expected it to. And there, you're over 1823, so we have to just get out and give up. So let's kill that. Once you're over 1820, the whole premise is gone, right? Even though he's still low, he's above 55, he's above 20, so there's no longer a reason to stay down here. So we'll go like that and get out. There we go. Ha, and now it comes down. All these bastards. Oh, well. No regrets. All right. So anyway, we didn't come up to this line here, but we're over the line here, and we're over 55 here. So we have no desire to keep playing that. Let's see where NQ is on their line. NQ. You know, plus I got other stuff to do when I get off, so I can't be staring at this stuff. Nope, NQ's still way below the line, so just unfortunately didn't resolve the way we wanted it to, and we had to get out of the trade. But that's how you do it. You know, the future is your discipline's got to be, as soon as you get in, you got to be looking for a reason to get out. And if you don't get out when you're supposed to, you can really, really get burned. That's what you got to be careful of. All right, guys. Well, that's it for this webinar, and we will come back and do it again next week. Keep an eye. If you're a member and you're not getting the top trade alerts, you absolutely should be. It's not a separate membership. It's part of your membership. And if you go to the top right of the screen, oh, hang on, I can show you. If you go to the top right of the screen, and my thing, it says Phil's account, so it's going to say your account, and you click on that. Let's see what happens. Oh, what? Oh, well. If I were logged in more properly, it would do that, I think. But anyway, so you click up where it says your account, and then one of the, oh, I see. So it's hang on a second. Why I did that. So if you click on where it says your account, there you go. And right here, see top trade alerts? What you have to do is check that off, make sure you're getting your top trade alerts, and make sure it's got all your correct information, you'll be all set. All right, so thanks, everybody. Have a great day.